So I know this is a super hot topic these days. Will having MCA debt on your business prevent you from getting an SBA loan? And the quick answer really is yes. In most cases, it will prevent you from getting that SBA loan. Although there are some nuances and potential workarounds, which I'll talk about in a minute. So there's really two reasons for this, right? One is just structural. A lot of folks think it's the balance, right? Having large balances. It's not really the balance as much as the structure of MCA loans, advances, whatever you want to call them. These things are compressed, right? The payback terms are so compressed, anywhere from maybe 6 to 18 months, maybe an average of 10 to 12 months these days. If you look at the payments, whether it's on a weekly or a monthly basis, when the underwriters go to do their debt service coverage ratio analysis, right, which is a measure of how much you have in debt payments relative to your income, it throws those ratios all out of whack. So once you add MCA debt in, you're paying, well more than 1.15, 1.25 times your net income in debt, which is an automatic disqualifier in most cases. So that's it. Number one, it's the structure. Two, it's really just a perceived risk standpoint from the underwriter. So their feeling is if you have MCA debt now, you're more likely to take MCA debt in the future, whether or not you get the SBA loan. There was a study they did a couple years ago. They looked at the data and they found that of the loans they funded where they refied or consolidated previous MCAs funded with the SBA loan, the majority of folks that took additional MCAs after the fact ended up in some kind of default or distress, right? So from a risk standpoint, the SBA obviously didn't like that. So that's number two, risk. What options do you have from here? Or what should you do if you have MCA debt? The first option would be obviously to try and pay off the MCA debt yourself or pay it down little by little. Not everybody's in that situation or has that ability, but that would be the cleanest and easiest. Two, there are one or two products we are able to use to get around that. One would just be a conventional bank loan. We do have a couple loans and funding partners that will look at deals with MCA debt in there, and they'll look to either consolidate or refi it and then provide some additional working capital. There are also some alternative lenders these days, which we'll look at. There's one I'm thinking of specifically. They're looking more for growth opportunities within businesses. So if you have some MCA debt, but you're showing steady growth year over year, maybe the last 2 years, they very much want to take a look at your file, assuming credit is okay and the business is actually cash flowing. So we do have some options. Feel free to stop by our site, direct message me. I'm always happy to have a conversation, or hit the link below and read more about it. Thanks.